Welcome to Ecommerce Profit Guide, where we help you maximize your e-commerce profits. January is that time of the year where e-com sellers freak out because it's time for their tax returns. And generally speaking, you've got a choice between cash basis or accrual basis for doing your tax returns. Now, a lot of sellers wait until the last minute to submit their information to their CPA. And then they choose cash basis accounting because generally speaking, it's cheaper and it's easier to do. They do this as opposed to doing monthly accrual-based accounting because typically there's more involved with that and it tends to be a bit more expensive. But what is best for your business? To answer that question, we're talking to Richard Starkey, our resident e-commerce accountant, and he will be talking to us about the pros and cons of each one of the different views. Richard, what would you recommend?
So if you've got a CPA just doing your books at year end, right, instead of using a proper e-commerce accounting service where it keeps it up to date monthly on accrual basis, well, here comes the problem is you can't plan ahead, right? So you need to be planning either budgeting for what your tax bill will be. Remember, you're supposed to be making quarterly payments, right? Or you could then actually take proactive action with a clever tax planner to use that profit in a tax efficient manner. You can't do that only in December. Without correct data coming in, and I say correct data, your correct accrual accounts, your income statement's useless to you for planning, right? So good luck getting that done a month before year end. It's too late to make any decisions. So I think as a bigger principle here is you need accurate data in to make better decisions as you proceed through the year. You can't go back in the year and buy a property or buy assets or put money aside 6 months ago if you only get the data now.
There you have it. Although cash basis accounting is generally cheaper and easier to do, the problem that you sit with is it doesn't give you the information that you need to make good business decisions. And it also doesn't afford you a proper lead time for you to be able to plan accordingly for your tax liability. That means that it makes it much more difficult for you to do proper tax planning if you're on cash basis accounting. With accrual accounting on the other side, you've got a lot more flexibility to plan ahead of time and you get much better data. As always, if you have any questions, please reach out to us in the comment section. We'd love to hear from you. And if you enjoyed this video, don't forget to smash that like button and subscribe to our channel for more. Thank you for watching the e-commerce profit guide. See you next time.